What's going on, everybody? Hope you're doing well. My name is Lamont. I've been a full-time trader for 7 years now, part of the ChartGuys team for more than half of that, where I head up our futures room and our swing report. In this video, we'll go over the overall market, hit you with some trade zones, update you on some prior trade zones, cover some hype markets as well, and that's pretty much it, coming to you from sunny Busan, South Korea today. So let us get into it. All right, so starting off with SPY here. So the last time that we spoke, we talked about this area being a potential trade zone. Why? Because, well, the breakout point was at 574.71, and that's just a breakout from this local demand zone. So this consolidation is healthy as long as buyers can maintain over 574.71. And so you can see the low of the week was made pretty much right off of 574.71, and so therefore affirming this structure as demand. However, it's also notable that on Fridays, during Friday's session, I should say, we had a move that rotated to the high of this volume area, which we discussed during the Friday live stream, and then pulled back right from there. So essentially, this area is now acting as supply, this area is now acting as demand, and the buyers, rather the sellers, are flirting with setting a daily lower high here at 584.64 if they can break under 578.08 next week, which is, you know, they're positioned pretty well to do so. So it's very likely that they will set this daily lower high here. And then if they can break under 574.42, well, then that would be a daily lower high and lower low. But what I really care about is whether or not they can find acceptance under 574.71. So that is pretty much it. And the point of control of this local demand zone is 571.35. So as long as these buyers can maintain over 571.35, then this structure is still being affirmed as demand. Although, of course, the best case scenario from here would be to continue to prevent backtests of 574.71, just like these backtests over here. Hold on, let me move this back to where it should be. Just like these two backtests over here, right? Or just backtest of this prior high. So that's pretty much it. Actually, these were failures to touch down. The low of this session was 565.17, and so they missed the backtest by a penny. And then the low of this session was 565.27, so they missed it by 11 cents. So, you know, this is notable, right? As long as you can hold these super clean backtests and ideally prevent a backtest, prevent touching down from this breakout point, well, then that would pretty much be the best case scenario for buyers. All right. So if you initiated here, you know, I definitely recommend taking some profits, throwing your stop under this local low. I still think this is a very reasonable trade zone. Like this, the trade zone is still very reasonable as long as this demand zone is supportive. And you just need, ideally, to have hourly oversold conditions to increase the potential that you see some relief bounce so that you can position for it safely, take your risk out of the equation on that bounce. So for example, if you initiated in here, the hourly was oversold, if I remember correctly. I mean, I'm sure it was because I was, you know, kind of bummed about missing it. I was traveling this day, or rather, I had slept early that day, that night / EST day, in order to travel early the next morning. And so that's a bummer. I was scouting that trade for a long time, and, you know, just shook out without me. No big deal. But anyway, this trade zone is still reasonable as long as you're doing so with short-term oscillators extended, so that you can, you know, put the risk on when things are extended on the lower time frames. And then as the relief bounce gets going, you can take your risk out of the equation, throw your stop under the local low. If you stop out, that's fine, rinse and repeat. And that's pretty much it. So that's pretty much it for this SPY. Weekly consolidation is now underway. Anything over 565.27 is going to be good for that weekly high or low. And that is really it for SPY. Moving on to the Qs here. So QQQ, let's see, a higher high here, no follow through. So again, you know, the breakout point is what we really care about, right? So here, let me just kill some of this stuff here. 574, hang on, we don't need this because it didn't come into our trade zone. It's still a very reasonable trade zone. Again, you just want hourly oversold conditions into this area to be looking for those trades. And so this breakout point is the key, 487.88. Breaking out over this high is affirming this structure as demand, not including this little bit over here. I'm just viewing it as this area over here. You can see how the back test over here held, and then another drop and pop over here at this prior breakout point held for the buyers. That being said, the sellers responded in kind with a drop and pop at the high of this local range over here. So this is still just local bounce as long as you are holding under, as long as you can't find acceptance over 498.83 and under 487.88. We're just looking at further daily balance here. So Space for a daily higher low over 485.05, but I personally don't really care about this potential daily higher low. I only care about this local balance that's occurring right now. So that's really it. So still testing this all-time high structure here, the supply from July 5th to July 16th. That's really it. So next week, it's all about, can we find acceptance over 496.29 to affirm that all-time high structure as demand, or can we find acceptance under 487.88 to negate the change of this breakout? All right, weekly retracement also underway, I believe. Yes, anything over this little rinky-dink higher low here, 477.40, is going to be good for a weekly higher low. Moving on to IWM. So IWM here, it's a notable failure, right? So first things first, let's talk about, what do we care about? We still care about this big old 2021 structure from over here. This guy is just a stone's throw away from all-time high, and there's very little supply over this structure. So if these buyers can continue to affirm this structure as demand, well, then they're going to stay positioned well for a go at new all-time highs. And as of right now, despite the weakness, they are still holding over 217.38, that point of control, affirming that structure as demand. However, that being said, it's hard to ignore this potential head and shoulders here. You got 3 days of supply that these buyers need to overcome in order to negate this potential head and shoulders pattern. It's also very notable that they held, let me hide this here. They held this point of control, pretty much a perfect test of it, right? Pretty much right down to it. But the buyers failed to test the value area high. That is not a good look, right? Because after holding this point of control here, the goal for the buyers is to make their way back up to the value area high. And so to get so close, after a gap up open, so you gap up, you go for the the opening sequence or whatever you go, and then fail to tag the value area high, a very notable failure, and now you close pretty much near the low of the day. So the sellers are positioned really well to set this daily lower high here at 221.97 if they can break under 218.52 to start next week. So that's what we're looking out for, and we continue to monitor 217.38. That's really the key level here. As long as you can't find acceptance under 217.38, then that big old 2021 structure is being affirmed as demand, and then that keeps these buyers comfortable and positioned well for a go at all-time highs. Okay, so there's still some supply, but they're still positioned well to have a go at the all-time high supply, I should say. Not the all-time high, but the all-time high supply. Supply sitting at the all-time high. That's really it. So moving on now to the trade zone. So it came into the trade zone and very weak bounce. So I do believe though that the hourly oversold conditions within the trade zone still did mark a couple of lows here. So a little bounce. I still maintain that this is the very reasonable area to be looking for trade, right? The idea, of course, is still based on the 2021 structure, and so as long as you can hold over it with the stop under the low over here, this is pretty much the best case scenario for these buyers. Whether or not they can get it done, I never know, but that's where I'd be willing to take a bet. All right. Super cool cups in Korea. Couldn't figure it out initially. So you have this. It's a cup in here, and then this is the the insulating cup, and then this lid is super robust. I thought it's really awesome. I don't know. I wish we had this in the States. It keeps your ice super cold. I've been sipping on this for 2 hours. Anyways, they really take their coffee seriously here. I love it. So anyway, for the Dow here, I continue to maintain this is the trade zone, right? This is the key spot. These buyers need to maintain over this local demand zone in order to continue to affirm it as demand and stay positioned well to continue to press the new highs here. That being said, lots of space for technically a daily lower high has been set at 426. After this little lower high here, technically, it's the same candle as the lower high and the lower low, so I don't really love that. It's not really much of a bounce, but you have to call it for what it is. Technically, it is lower high, rinky-dink one, and it's a notable failure. So initially, you can see. Let me just get this out of the way first. So you can see this initial defense here, right, of the value area high of this structure, and then you can see for 2 sessions in a row, these buyers are playing defense off of the value area high, and then similar to the RUT, where you have a gap up open, fail to get to the next key reference, which is 426.20. So holding over the value area high, of course, affirms this structure as demand, but an inability to get over the high of the structure over here, 426.20, obviously it's not a good look. And so now the low of the day, the close was pretty much right at the point of control of this structure at 421.08. So it's do or die time for these buyers. Have to find acceptance over 421.08 in order to continue to affirm this structure as demand. Affirming this structure as demand keeps these buyers positioned very well for a go at new highs. That's pretty much it. Weekly retracement is underway here as well. Space for a higher low over 400.81. I continue to maintain that that trade zone that we shared is still a very reasonable one. Again, you just want to be waiting for hourly oversold conditions to be using it. And that is really it for the Dow. I feel like my order is messed up a little bit. I'm not sure. Moving on to the dollar. So the dollar, this was our updated trade zone. This was our original trade zone over here. I still think both are quite valid. Like if you don't make if you take this trade over here at the updated trade zone and it doesn't stick, the original trade zone I still think makes a lot of sense. So at this point now, the first target and the secondary target from our original trade zone have now been hit on the dollar. And this is just your standard, responsive trade, right? Because we know that for the dollar, for years now, this area of demand has contained the lows, this area of supply has contained the highs, and because we were extended into this demand zone, well, odds favor responsive trade, right? That's just how the market has to work, right? When the market is balancing, it's telling you what it's doing, right? It's found fair price, more or less fair price to do business over this range, over 100, under 105-ish. And so, traders do what works until it doesn't, right? You can see multiple holds of these lows over here, multiple holds of these highs over here, and so that's really all there was to it. Yeah, surprisingly got a lot of messages regarding the dollar. I didn't know so many folks traded the dollar. Maybe I'll buy data for it. It doesn't matter, it's a swing trade video. So anyway, that's pretty much it. So I'm watching this guy as well because this fellow over here was supportive of price here and over here. And so now that we have cleared this daily no change level 101.855, this prior high over here, if we were to retrace from here, from falling from all the way down here, from up here to fall all the way down here, essentially would be a back test of this structure and a back test of this prior high, 101.855. So the updated trade zone, I still maintain this is a very reasonable place to be looking for trade, as long as, again, you wait for these hourly oversold conditions to increase the potential that you get some daily bounce, or rather some relief bounce, so that you can take your risk out of the equation on that relief bounce, clear your stuff under the local low, and then, let Jesus take the wheel. Hopefully that local low is the higher low. Okay, lots of space for a weekly higher low over this local low here, 99.865, and the daily time frame also is bullish, of course. Space for a rinky-dink higher low as well over 103.245, trying to set that one here at 103.800, got to break over 104.205 next week in order to get that done. All right. Moving on to the VIX here. So the VIX, they're just hanging out, going sideways, which is just really what the VIX does. It's an elevated VIX environment, elevated volatility environment compared to what we were looking at for a long time, ever since that October 2023 low, but still not a very high elevated VIX. So, there's not really that much fear in the market right now. The fear and greed index probably chilled out a bit now after that little bit of retracement that we saw. So let's just take a look and pop in. It's probably still at greed, but probably off of extreme greed, which was, just made its way into recently. Okay, so not really that much fear in the market. So, the VIX is being elevated. The only adjustment that I make when the VIX is elevated is just sizing. I approach everything exactly the same way and just size down a little bit because you want to account for that volatility if you are talking about from an intraday perspective. So that's really it for the VIX. I might stop covering the VIX. I only have one trade on the VIX, and it very rarely sets up. It's like a weekly setup, so it would demand a lot of selling first. Anyway, moving into NVDA here. So NVDA new all-time high was established next week. Didn't really see that much follow through on it, but at the same time, it's still positioned so well, pressing near the highs here. And let's see, daily higher low has been established here at 137.46. Key resistance is, of course, just the all-time high, 144.42. Let's see here. Did we have a trade zone for this guy? I think we did. Well, it was that old one, but I think we had a new one as well. Or I guess not. Okay, so let's set one up now because I think it's still reasonable. At this point now, you have so much space for a weekly higher low to be established over 100.95. Anything over that's going to be good for one. And so let's see, I think hourly oversold conditions into this guy I think is pretty reasonable. into really both of these structures, right? This is technically the local demand zone, but the best case scenario for these buyers would be to hold over this fellow over here. And so I think hourly oversold conditions, something like this into here, makes a whole lot of sense, right? So essentially you're playing off of this structure's point of control, this structure's point of control, this structure's POC as well. And then it's also just a back test of this guy over here. And because we are, you know, pretty much at all-time high, we've just got to use our projection tools now. So let's zoom out to the weekly. And I think these buyers should be trying to come here. So I know it's already close to there, but that's still what I think we should be playing for. Something like this. Oops. Something like this, I think, makes a lot of sense for NVDA. And again, just want to make sure that you have hourly oversold conditions whenever using any of these trade zones. Getting sick of saying it, but gotta do it. So that is pretty much it for NVDA. Again, even when weekly consolidation comes, there's so much space for a higher low that, you know, these buyers are still very comfortable here. I believe there's space for a monthly higher low as well. There is space for a monthly higher low. Anything over 90.69 is going to be good for one. Moving on to Bitcoin. So Bitcoin, this is very healthy consolidation. So remember, the goal for the sellers after any kind of breakout is always to try to negate that breakout, right? Just like if someone punches you in the face, your objective is now to strike them back. Well, I mean, it depends on the context. Maybe you just want to exit the situation because it's not worth fighting. Like if you're on like concrete or whatever, or he's got a whole group of friends with him or something like that, then maybe you just want to leave the situation. But if it's like a fair, sanctioned fight and somebody hits you in the face, then, you know, obviously you want to try to return in kind, right? So that's the objective. And as long as the buyers can hold over 64467.02, well, then essentially they are avoiding being struck back by the sellers. So this consolidation is super healthy. You'll notice you're backing off right off of the prior all-time high, 69,000. So essentially this structure comes back into play, and we've been watching it forever. This all-time high structure here, the high of which is at 69,000, the point of control of which is at 61003.36. As long as these buyers are holding over 61003.36, and that prior all-time high structure is being affirmed as demand, and as long as that prior all-time high structure is being affirmed as demand, well, then obviously these buyers are doing just fine. So I still continue to maintain that this is a very reasonable trade zone. This is enough follow-through over this point of control that at this point, if you were to start selling from here, you'd probably get oversold up to at least a 4-hour time frame. It's enough lower time frame extension that you would anticipate there to be some kind of relief bounce in this area, again, to come into the trade when things are extended. If things are extended into this key demand zone, we should see some relief bounce. If you see some relief bounce, take a risk out of the equation, throw a stop under the local low, and then, you know, again, let Jesus take the wheel here. So that is pretty much it. Daily higher low has been established at 65149.51, and trying to establish another one here at 65500.01. Got to break over 68742.38 in order to actually do so next week. At any time, really. So that's pretty much it for Bitcoin. And that's right. Ethereum, did we cover Ethereum too? Okay, so Ethereum, this is the top fishing zone that we've set up way back when. It continues to be a very reasonable area for trade. Why? Because, well, it's just top fishing, right? You have all this key supply over here. This key supply has obviously been problematic for these buyers here. You can see this pretty much picture perfect rejection from over here. And so this is really just responsive trade, very similar to dollar. Very similar to dollar. And so as long as you're continuing to see this sideways trade here, I think it's reasonable to be looking for sells up against this prior low here. You know, that being said, bigger picture, Ethereum is really not looking that bad either. You know, 3-month time frame, just looking for a higher low. You could be looking at bigger picture balance, so like looking at something like this. So, you know, again, that's why I set it up. I didn't do it because, well, I'm not really too interested in being a seller right now. There's just not really that much fear in the market for me to be interested in it. And, you know, the overall markets are continuing to stay strong. So, and crypto was lagging the overall market on the last big old rip up from October. So I'm thinking there's the potential that, you know, these guys are just acting as laggards. That being said, you know, it's a reasonable trade, right? The R is good there. The location is reasonable. If you have extension into this guy, I think you could continue to be using this trade zone. If you're a buyer, you're really waiting down here, right? Like this guy over here has been supportive throughout all of this big rip up. Dip down, hold, dip down, hold. So I would just be looking for buys down here off of this like 2045 level. Okay. Moving on to CCJ. So CCJ, flirting with coming into this trade zone here. This trade zone was set up just based off of this prior all-time high structure here. That's this guy over here. Again, it's the same concept, right? If these buyers can maintain over the point of control of the structure at 50.22, then they affirm that all-time high structure as demand. Affirming that all-time high structure as demand, well, then obviously keeps them positioned very well to press new highs, because that would mean that higher prices relative to the prior all-time high are being accepted, right? So it really need not be any more complicated than that, I promise you. Now, additionally, you have this local demand zone over here. So you give me hourly oversold conditions into this area. I think very reasonable place to be looking for trades in CCJ. And nuclear energy seems to be getting more and more attention recently, with the big tech names like the Fang Man T names talking about how they are looking to invest in nuclear energy because, well, AI takes a lot of energy, tech takes a lot of energy in general. And so to power all that compute, you need energy, and nuclear is actually statistically quite safe. So yeah, starting to see this, you know, stigma kind of evaporate a little bit here, but you know, these things take time. So that's pretty much it for CCJ. The weekly time frame is also just looking for a higher low. It hasn't even begun weekly retracement yet, but once you do begin weekly retracement, anything over 35.89 is going to be good for that weekly higher low. All right. And then finally for MSOs, you know, it's really do or die time, right? The election is right around the corner. Both candidates have kind of alluded to their desire to legalize REC. I think Harris more so than Trump, but either way, both candidates have you know, again, exhibited interest in legalizing REC. So it's do or die time, you know, like it's either going to happen soon and we're going to see a decent run, or it probably will just be another trail of tears for marijuana traders. So I continue to maintain this is where it's at, right? If you're an MSOs trader, this is the key zone. This is the demand zone sitting at the all-time lows. As long as they're holding over here, then these buyers should be trying to come back here. This is the big old area of supply that's in the way. You can see how many probes pop and drops over that prior area we've seen already. And so that's really it. I mean, the buyers have not even back tested this guy over here, 8.32, this prior low. All of this price action is the buyers trying to negate this breakdown, which again, they haven't done yet. That being said, it does look like basing, right? So you have this huge demand zone here. If you haven't initiated trade using the trade zone of old, it's reasonable to be doing it over here. It's much more aggressive. The location is not as good, but something like this, I think, is also quite reasonable. If you're looking for trades in MSOs, ideally you'll have at least hourly oversold conditions, which I don't think you would from here. So ideally you'll see a move up first, get things, you know, create some space over this zone before looking for that back test of this area here. Okay, so that's pretty much it for MSOs, and we'll do some show and tell for the swing report, which again is just 2 novel ideas sent to your inbox every single week, and I'll do live updates for any trades that we take ourselves. Obviously, I don't take all the trades because 2 swing trade ideas every single week adds up very quickly, but anyway, one of our recent picks was Tesla. And so Tesla, this was our original trade zone here. I can show you the publication date was on July 6, 2024. And here's the original zone. Caution, the stop zone, and the target. All of these things will be provided for you with this swing report publication. And additionally, like I said, I will, if I take the trade as well, then I will give you updates. So this update went out at 9:45 on August 13th. 9:45 on August 13th was on this day. And I thought I had it selected already, but I guess I don't. Let's see, August 13th was over here. So at 9:45, these are 15-minute candles. So, you know, obviously there's a little bit of a delay, right? I have to do the trade as well, and then you know, type up the alert and push it out. So there's a little bit of a delay. But even if you were to have bought the high of that 9:45 candle over here, you're still only looking at like a 2% stop from that position. So, and 2% is really not that much risk. And so you could have decent size, I would say, be pretty decent size on that. And at this point now, if you had initiated trade there, you know, we are now, I don't know, like 30% from there, right? And so you could have handled this 2 ways, right? You could have just used the old, you know, swing report trade zone that we provided for you on July 6th, which again just looks like this, right? Scaling into this, stop is under here. You're flirting with a test. I mean, it's almost at the target. It's not gotten there yet, so technically this is a premature show and tell, but I don't know, I just think it's a pretty good example because not only did the official trade zone work, but also, you know, I give you these live updates as well. So there are pros and cons, obviously. If you use the trade zone itself, then the risk was 8%. It's much higher risk than the 2% or whatever from the active trade if you were to do it alongside with me. But I do my best to try to offer, you know, console for both the active traders and folks who have less time. So if you have less time, you're not at the desk every day, you don't want to be actively trading, you can just use these trade zones that I share with you, making sure that you do so in hourly oversold conditions. And if you are a more active trader, then you can just trade along with these updates, because I make them. So so that is pretty much it. So if you got anything from this video at all, we would very much appreciate a like and subscribe. Helps us out a lot, costs you nothing. Otherwise, I appreciate you guys sharing some of your time and energy with me. If you're interested in Swing Report, links in the description below. If you're interested in trading alongside a community of 1,000 traders, including Dan, of course, and the Chart Guys team, then check out our community, links in the description below. Otherwise, again, I appreciate your time, appreciate your energy. Thanks for sharing some of that with me. I hope you enjoy the rest of your weekend, and I hope to see y'all soon. Farewell.